Welcome to Crescat's Market Call, featuring our macro and activist mining research. I'm Kevin Smith, Crescat's founder and chief investment officer. Before we get started, please read through our important disclosures being shown now. These and additional disclosures regarding the risks involved in the type of investments we will be discussing, as well as the fund's performance, can be found on Crescat's YouTube channel or on our website using the QR codes on the slides. The type of investments discussed on these videos can carry significant risks, including risk of loss. The videos are intended to be general discussions of macro investment themes, the mining industry, and news with respect to the companies in our activist metals portfolio, and are not intended to be investment advice or an offer of investment advice or services. Crescat's managed funds only accept accredited investors, and the discussion in these videos has been prepared with that level of audience sophistication in mind. Any forward-looking statements may or may not come to fruition. If you enjoy our videos, please click on the like button and make sure you are subscribed to our YouTube channel to get notified of upcoming episodes. You can also follow Crescat Capital on X for ongoing macro research and important news updates on our activist metals positions. If you want to learn more about Crescat's investment strategies, we encourage you to reach out to our head of investor relations, Merrick Iwahashi. His contact information is on the screen now, and it can also be found on our website at crescat.net. All right, welcome everybody. We've got an exciting show for you today. We've got myself and Nathaniel here to talk about macro and to talk about our strategy at Crescat, our activist metals strategy in particular, as well as our different funds. And then we will have there's been so much news among our companies. We'll have updates on the news across the activist metals portfolio, and then we have a special guest. I sat down with Tom Larsen, the chairman and CEO of Eloro Resources, and we've got a great one-on-one conversation with him. So let's start talking about macro and about gold here. So what we're looking at comes from the World Gold Council, and it shows both the total above ground gold stock. So this is all the gold ever mined in the world and still out there today in jewelry and bars and coins across central bank holdings, as well as other sources. And then we've got and then in the blue down there at the bottom of that graphic, you can see the in the ground gold reserves, as well as in the ground gold resources. So first, that cube in gold, the 22-meter cube, which is about the same volume as 4 plus, a little bit more than 4 Olympic-sized swimming pools. This is all the gold in the world ever mined and still held today in one form or another. Gold, most of the gold that's ever been mined is still out there. It doesn't get consumed. And then you look at the reserves. So there's 219.8 thousand tons of above ground gold stocks. The gold cube there, the 22 meters, and that's about 7.1 billion ounces of gold that's ever been mined. If you put it in ounces terms, and it's it's funny. It's kind of like a Saturday Night Live skit. These the weights and measures kind of skit, because tons, ounces, you have to multiply the tons by 32,150.7 in order to convert it to ounces, and so it's kind of a pain in the butt, but that's what it is. And where we're focused here at Crescat with our activist metals mining portfolio is really on that resources side of things. So there's in the blue down there, you can see the number 5 and the number 6. You've got reserves out there. This is among all the global mining companies, 54.7 million of reserves. Those are reserves that have the ability to be mined, and they're at a higher level of engineering study compared to resources, resources, which are mostly based upon drill results, and as well as 43101 compliant or JORC compliant, resource. But it's not the same level as the reserves that has a higher engineering standard, and it's closer to getting into production. And I'll show you why we're focused on the resources area in a minute, but it's basically because we believe that's where the most value is. And so there's 132.1 thousand ounces of resources out there in the world. That's about 4.2 billion ounces of gold, 132.1 thousand tons, I mean, and that's where we think the most value is. Let's go on to the next. So here we're looking at a theoretical price target for gold. If all of that above ground gold, that 22 meter cube, what was the what was the reserve currency for the world? In other words, if we take the global M2 money stock, money supply, and we divide it by all of that above ground gold, this is effectively, implies a 100% backing of the M2 fiat money supply by gold. It's, as if we were back on a gold standard, and it's a theoretical price target. The accuracy is, the projection is speculative, and it depends entirely on whether the underlying economic assumptions and forecasts prove to be correct, which may not happen, as we say in our disclaimer down there. But gold has been a global reserve currency in the past, and central banks have been net acquirers of gold now for more than a decade, and they continue to acquire gold. It is a global reserve currency, and the value of gold reserves held by global central banks has surpassed the value of U.S. treasuries held by global central banks now. And so we've had an important shift. And let's anyway, this is one way of looking at a moving target price for gold. And because we have the M2 money supply accelerating now once again, we think it's an important way of looking at a potential target price for gold. Gold's only $4,000 an ounce right now, and this implies a 16,584 target price. So let's go to the next. So now why do we like the exploration segment, this kind of resource segment of the mining industry right now, of the gold industry? And the reason that we like it is it has extraordinary value. What we're looking at here is in the top panel of this chart, in the yellow is the price of gold. It's going back to the start of this exploration index, which is otherwise known as the TSX Venture Composite Index. This is where many of our companies in the exploration segment are listed, and a handful of our companies are in this index. But what it shows is that when this index was first launched at the end of 2001, the price of the exploration focused mining stocks was going up at a faster pace than the price of gold. When gold was in a bull market, the gold exploration stocks were going up at an even faster pace. But that really peaked out. The index peaked out at an all-time high in November of 2007, and that was right before the global financial crisis. Gold took a hit in the global financial crisis, but the precious metals explorers, which had perhaps gotten ahead of themselves, took an even bigger hit. But what's fascinating to see is that the value of this index in dollar terms, mind you, we're looking at this index in dollar terms. The value of the index is about the same price that it was at the depth of the global financial crisis, if not even still a little bit lower. This index did not bottom until the middle of COVID on March 18th of 2020. And this is, right before we launched our precious metals fund. And at Crescat, we've been fans of the mining industry of gold for decades. But the catalyst for us to launch the precious metals fund was just how beat up the gold mining stocks had been, and especially the exploration focused gold mining stocks in early 2000. We didn't get that fund launched until August of, I said 2000, I meant 2020. We didn't get the fund launched until August of 2020. And so we caught as you can see, that the index ripped up in 2020, and we only caught the latter half of that rise when we launched the fund. But what's important to point out now, when you look at the lower panel here, we compare gold to actually in the numerator is the TSX Venture Composite Index, and in the denominator is the gold price. And so you can see the relative performance of the two. The explorers have underperformed for such a long period of time. In fact, the relative performance of the two indices only bottomed in April of last year. Now, as you recall, last year, Crescat had 5 of the top 16 performing hedge funds in the world, according to the Preqin database. Why is that? It's because we were heavily focused in a diversified portfolio of exploration stocks, which was the largest theme in all 5 of our funds. But that little blip up in the blue line after that circle that you see on April 7th of 2025, that was Crescat's funds, starting what was an incredible run of performance, for that year. But we've since, the precious metals mining index, gold, silver, all peaked out around January 28th of this year. And what's happened since then? We've had or maybe it was February 28th. It was one or the two. But we've since had Kevin Warsh. I think the appointment of Kevin Warsh as the Fed chair is what literally marked the top of the gold market recently. And it's because he's a hawk. Warsh is a hawk. And then we had the Iran war, which caused fears of oil price spikes and that rippling through to other inflation measures, and it caused caused the expectations of Fed rate cuts to go to expectations of Fed rate hikes, and we've had an extraordinary pullback in both gold and in the gold mining stocks and the explorers. But the explorers relative to gold price, it bottomed back in 2025, and that was basically an 18-year period from that, in the lower panel, from that top circle to the bottom circle, an 18-year bear market in the relative performance of the precious metals exploration stocks relative to gold itself. This is where the deep value and the high appreciation potential is, in our opinion, and in the whole entire precious metals market and mining industry. And that's why we are focused on exploration. And we think there's still so much to go. So let's, anyway, we're going to have a letter out soon where I'll be talking more about this chart and have a bunch of new charts. So let's keep going here. So this is a chart we put out, several months ago, and I updated it a few weeks ago, and this is what it looks like. We're looking at the top 5 hyperscalers forward 4-quarter free cash flow estimates. Now, a lot of people have tried to copy this chart since I put it out, and that's great. I love it when other people take the same idea and run with it. And as you can all see today, the entire narrative of the incredible amount of CapEx and how it's eating into the free cash flow of these major tech companies, that whole narrative is becoming, one of the most talked about narratives in the stock market today, as a sign of a potential market top, certainly a top for the large cap tech stocks. But this is just showing that these top 5 hyperscaler big tech companies that were positive free cash flow generating, for year after year, and that correlated highly with the S&P 500. Now we have the S&P 500 around 7,500 at the index level. It's going up. It's a sharp jaws pattern, and I mean, yes, to date, all this cash flow has been going to the semiconductor industry and the semiconductor stocks who have positive revenues and positive earnings growth and really high margins. But this is the sign of a top in the market. In our strong opinion, it rhymes so much with the 2000 tech bubble top. It was the same phenomenon. I don't care what anybody says. I lived through it, and it was the same excessive capex spending that is totally unsustainable. You know, the question is, can these companies get a return on this investment to justify this extraordinary amount of capex? And I don't think it's possible. And so it translates right back to the semiconductor companies, because as these guys stop spending, then that's the peak in the semiconductor cycle too. And that's what you've seen recently. I think Nathaniel's got a chart or two on that he's going to talk about. Let's keep going. So I showed another chart that has a price target, theoretical price target for gold based on M2 money supply. I'm going back to this chart, which we put out in our February research letter to illustrate another way of looking at a price target for gold that's completely different from looking at M2. And it's just simply looking at the gold to S&P 500 ratio. And we put this chart out earlier, I did, to really show what the long-term dollar cycles are all about. Because, you know, some people, including a professor of mine from the University of Chicago Business School, have talked about these three waves of the dollar cycle. Well, the three big waves of the dollar cycle were that first one during the Great Depression, when FDR devalued gold, and we had a major stock market correction, and this ratio of gold to S&P shot up to 4.5 or something like that. And the second one was in the 1970s when Nixon took us off the gold standard, and we had another devaluation of gold relative to the dollar, and this ratio shot up to almost 6 times gold to S&P. We had a false start, we think, in that 2000s run in gold, in the wake of the tech bust and then the global financial crisis. But all that money printing, that I thought would and many others would lead to inflation has it didn't in the ensuing period, and we ultimately think it is and it will lead to inflation, especially in the post-COVID era. So we call that a false start. But if you project out a 50% decline in the S&P 500, let's say, which we've seen. We saw it in 2000 to 2002. We saw it in 08. We saw it in 1973, 74. We can, from record all-time valuations like we have today across every measure you can possibly think of for the S&P 500, a 50% correction is not out of the question. Okay, so and if we get another dollar devaluation, another effective run up in gold relative to the price of dollar, because global central banks are net acquirers of gold today, and especially if the U.S. Treasury or Fed were to get into the game, we could see another devaluation of the dollar relative to gold. So what do you get? So my point here is you can get a theoretical target price for gold by looking at these ratios. You can take 50% haircut in the S&P. We're at 7,500 today. That gets you to about 3,750. And then you take the average of those other two tops in this ratio, and you come up with a like a 5 times multiple of the S&P 500. It gets you to a $18,750 theoretical price targets. All the disclaimers about this being a theoretical model that we had in the other M2 chart apply to this analysis as well, but it's a different way of vectoring in on a price target for gold. Gold's only at $4,000 today, people, and central banks are net acquirers of gold. That's $18,750 target price. Is not too different from that M2 target price of 16,500 or so that we had. Let's go on to the next. So why are we so excited about the opportunity in the precious metals mining space? What's everything that I just showed you, and this pullback that we've had in gold and gold stocks since February. I think it is an incredible opportunity for people to be considering putting money to work. I'm talking into our funds. Yes, our funds have had a pullback, but through the end of last month, look at how we are outperforming relative to gold, relative to silver, relative to the GDX and the GDXJ and the XAU Philadelphia Gold and Silver Index. And that Philadelphia Gold and Silver Index was one of the best performing indices in the entire market last year. Our fund, net of the highest fee paying, class of investor, has outperformed all of these benchmarks substantially. But this pullback that we've had, I think it's gone on too far. What you see today in the market, gold, silver up, the Venture Exchange Composite Index up, even GDX and GDXJ are down a little bit the last I looked, but stocks down, S&P 500 down, big tech stocks down, gold and gold stocks going up. This is what we are all positioned for at Crescat. And so this is a clarion call for people to, if you got money to put to work into precious metals, I seriously consider you take a look at our funds. And I think now is a fantastic time to look at them on this pullback that we've had. So I'm going to turn it over to Nathaniel to talk about macro, some of the macro charts that he has.
Thanks, Kevin. So this one here is kind of touching on what Kevin alluded to earlier with, the shifting interest rate expectations. Focus on the red line for a moment. That's the price of gold spot inverted from its peak in January 28th through today, kind of on a weekly. So you grab it every Friday. And we see it as it goes up, that's of course coming down, shift in line with how interest rate expectations have risen. So with that first big move up in gold, that's the Warsh nomination. And followed by that into late February, that's the start of Iraq war. And we've seen these interest rates, because again, of the fears of the war and inflation, just kind of start creeping up. But we've had some recent economic data that suggests maybe that's not what's going to happen. And we're seeing these interest rate expectations start to fall back down. And we believe as these come back to earth, gold is going to rally. Go on to the next chart, please. And this is interesting. This is not a one-for-one trade, obviously, but the total outflow from gold and Bitcoin ETFs and the semiconductor ETFs is about the same. So over this past, that's since April. So investors have been rotating out of gold into these semis. And again, that's putting further pressure on gold and I guess Bitcoin to some degree. But semis seem like they're kind of topping. And actually, I think stocks might have entered a bear market today. I think it's been a 20% pullback from its top. I'm not entirely sure on that. Let's go to the next chart. But we can see just how crazy this run in semis has been. This is the Kospi. I don't know if I'm saying that correctly. South Korea. It's very semi-weighted. You have Samsung, SK Hynix, and this has just gone parabolic. We're having really big up days, really big down days. This is not a normal trend, and this is not something that is going to continue. If you go on the next chart. And this is from today. Chips have been absolutely hammered. And it's actually interesting. We've had ASML and TSM both report earnings this week, and both beat. But they've been punished by the market because of their heightened capex. people are starting to become nervous about this. And, it's kind of a shifting tide that we're seeing. Let's go on to the next chart. We have big earnings next week. Look at Wednesday. We have Tesla and we have Google. And then we have Intel the following day. We have seen big tech companies beat and then sell off. And if we see this trend continue, this really could mark the top. And let's go on the next chart. The crazy thing too is this kind of coincides with how bullish people have been. I think this is from up until yesterday that investors were the most bullish on the market since January, since the start of the war, since the gold sell-off. And again, we're seeing this peak bullishness, disappointing, or not even disappointing earnings, but beating earnings, and the market now rewarding. Again, it just coincides again with what we believe to be a market top happening in the near term. That's all I have for today.
All right, thanks, Nathaniel. So we're going to get on to some of the news updates, and I'm going to have to blaze through this because we have an excellent interview with Tom Larsen, CEO of Eloro, that we're going to need to get to. So Kalo Gold. Kalo recently announced that some more geophysical and field work data that have identified several discrete mercury anomalies that occur near the convergence of major structures interpreted to have acted as pathways for hydrothermal fluids during mineralization. Kalo is in Fiji. It's an epithermal gold style system, and I'm just going to go on to Bill's, our geologist analyst, kind of conclusion on this, and the idea is that there's a potentially totally preserved system, and underneath this mercury pathway, and as Bill says, Kalo continues to complete good baseline geological, geophysical, and geochemical prospecting and rock sampling to characterize these low sulfidation epithermal systems and outline drill targets. It's still early stage here. The mercury anomalies in particular confirm that they are likely at or near the top, that the company's at or near the top of an epithermal system. Hence, any boiling or precious metal zone may lie beneath the current level of exposure and therefore remains a priority exploration target for Kalo. They've also had some discovery holes here. This is showing a geophysical map, which I'm not going to get into. I want to say that right now on our news, on our videos and news tab on our website, we're putting all of the geologic analysis that Bill Pearson is doing across our portfolio companies. And you can go there and view them. And we will be we'll be launching a whole new page on our website where we'll be putting all of Bill's research up there on all of our companies on a page, so you don't have to go into each of the decks to get it. And that will be coming in the very near future. Let's keep going here. Alpha Exploration. So Alpha has just announced their new field season, their new drill program, and I believe let's see. Well, first of all, here it is. So they're commencing their drilling in Aberna, which is in Eritrea. This is in the Nubian Gold Shield. This is a place where you can build a mine where other companies have paid multi-billion valuations to take out substantial discoveries. This company has three different properties and discoveries on all three properties. There's 2 gold properties and a copper porphyry target. This drill season is going to be fully funded drill season of, I can't read it, darn it. How many meters is that? I'm looking. 6,500 meters. So anyway, we're excited to see what comes of this drill season. Let's go on to the next. Fathom Nickel. Fathom Nickel recently had some updates on their drill program, which they just completed in the news. And this phase 2 program consisted of 9 drill holes totaling 3,200 meters. And Bill's excited. We're waiting for the assays. I think there was an overreaction personally in the stock, somebody sold a bunch of stock and knocked it down in this bear market. But Fathom Nickel is a large nickel exploration target in Saskatchewan, and really high quality geologic team. Where they have a discovery already on 2 parts of their property, but we're excited to see the drill results still come back. So let's go on to the next. Cartier Silver, another one of our Bolivian projects. Tom Larsen, who will be talking on Eloro, is also involved in Cartier, but they just announced the start of their drill season. This is the second phase diamond drilling commencing now at their high-grade silver zinc Chorrillos project in southern Bolivia. This is we'll be excited to see. They have 1 drill operating, and this is a very early stage exploration target. This is an historic silver mine that the company acquired. And it's one that Quentin was very excited about when he first did the analysis on this for us, and that's why we took a position here. So we'll be excited to see what comes of this drill season. We're waiting for assays. Let's go on to the next. Firefox. Firefox also announced the extension of their drill program, and this is in Finland and Lapland. They're expanding their drill program. It's always good to see a company expanding their drill program. It means they like what they see. Firefox has had some good results here. This is an area where Agnico Eagle just came in and bought another big explorer there, Rupert. This is a hot area, and Crescat is a significant shareholder in Firefox. We'll be excited to see more drill results here. Let's go on to the next. Hannan Metals. So Hannan has announced the start of their drilling up in Sweden. They have 2 properties. They have a gold target in Peru called an alkaline epithermal gold system at Previsto. And actually, this latest news release is about their applying for their drill permits at Previsto in Peru. And this is the target that Quentin was most excited about when he got us when he recently updated the analysis on Hannan for us, because the trenching results that they have at Previsto are substantial, show the potential for a substantial alkaline gold discovery. This is the type of a gold target that is like a Cripple Creek here in Colorado. Quentin thinks this is another potential Cripple Creek, but the problem with Peru is it's really slow to get your permits. This one is something I believe the company is very optimistic that they will be getting their permits here to drill. In the meantime, they've acquired another property in Sweden, another target that they're actively drilling as well right now. So we'll be excited to see progress at Hannan, especially in Peru. Let's go on to the next. Harvest Gold. So Harvest is a company with a gold project in the Abitibi Greenstone Belt in Quebec. What's the Abitibi Greenstone Belt in Quebec? Well, this is where Gold Fields just acquired Osisko, and it is a highly prospective gold epithermal gold system, orogenic gold system. It is and Harvest had their first discovery hole at the end of last season. So we're very excited to see what comes of this 4,000 meter drill program that is now underway. Crescat's a substantial shareholder in Harvest Gold. We got 19.9% partially diluted. Let's go on to the next. Goliath. So Goliath just put out some visuals of the first however many holes of this new drill season. They have a 50,000 meter plus drill program underway, and the visuals came back, showing more of the same stuff that we always get from Goliath, which is great stuff, great high grade gold and silver, and they have expanded their sherbet target with this drill program. I think this shows the both the Bonanza Zone, the expansion of the Bonanza Zone in particular, and the Golden Gate Zone. This is a big gold system that has a lot of room to grow, and it's high grade epithermal veins. There's gold, there's silver. It's in the Golden Triangle of British Columbia. Crescat's been an investor in this for probably 5 years now. It's a big discovery. They've done a lot of drilling, and they have a lot more drilling to go. And I think it's great this company has not even put out a resource yet. If they could put out a resource, if they wanted to, in the company's opinion and Quentin's opinion and Bill's opinion, the concern is that does this system hang together? And we think it absolutely hangs together. This is a company that just needs to get out there and continue drilling to prove to the world that I think it's something like a Great Bear, where Great Bear didn't put out a resource too soon, and they had an enormous amount of drilling. It was taken out by Gold Fields even before they put out a resource. And one of the best exploration gold success stories of the last 10 years, I think Goliath is one that can repeat that same concept of let's not put the resource out too soon. Let's just continue to drill and show that this thing can keep growing. Let's go on to the next. Aztec Minerals put out a pretty impressive intercept. This is a gold silver target in the Tombstone area of Arizona. Remember Wyatt Herb and the OK Corral. This is where these guys are located, and they have the biggest land package in the Tombstone area. They had a really nice intercept here, 1.08 grams per ton gold and 30 grams per ton silver over 155 meters. I mean, what's that? 1.63 times 155. I'll do it in my calculator. 1.63 times 155. That's over a 252 gold equivalent gram meter intercept. Congratulations. We think there's a lot more gold and silver to be discovered here, but that's a highly economic intercept. Let's go on to the next. Onyx Gold. Onyx Gold's been putting out some good drill results lately, and they recently announced another hole, 3.5 grams gold over 28 meters. But the news release even before this, I think we talked about it in our last episode, was a really long interval of high grade gold. So we're excited. They're in the Timmins, the historic Timmins camp in Ontario, and what they're proving is that Timmins has got a lot more gold, and so we're excited to be investors in Onyx. Let's go on to the next. BCM Resources put out some analysis. Sergey, the CEO and PhD exploration geologist here, he gave an update in this June 14th announcement where he where he talked about what he was seeing, and he's very encouraged with I believe it's drill hole number 18. Let's take a look here. Well, I'll just quote what Sergey said here. We're happy to report the completion of 2 drill holes to the southwest of Thompson Knolls, drill hole 15 and drill hole 16. Hole TK17 confirmed the extension of skarn with some mineralization. We are very encouraged, however, by TK18, so hole 18, which intercepted QMP intrusion at a much shallower depth of about 300 meters than originally expected. So they're getting into the guts of this porphyry at a shallower depth than they expected. QMP intrusion here carries hematatic oxidation, indicating the possibility for significant leaching of the upper parts of the intrusion that could potentially result in the formation of a chalcocite blanket at moderate depths in the vicinity of this hole. So these guys at BCM at their Thompson Knolls project are trying to find another Bingham Canyon. Sergey, the CEO and lead exploration geologist, he's the geo that found Oyu Tolgoi, one of the largest copper gold porphyries in the world in Mongolia, now owned by Rio Tinto. Rio Tinto has staked ground all around these guys. They are definitely interested in watching. So we're excited to see the drill results that come here. We're looking for a big copper porphyry. Let's go on to the next. Sitka. So Sitka announced some more drill results, and this hole was impressive. This is almost like a snowline type hole here. 164 meters of 1.83 grams per ton gold, including 45 meters of 3.49 grams per ton gold. This is at their RC Gold project. The RC Gold project has multiple intrusive targets, and this zone that they've hit here at Blackjack is just one of many of these gold intrusives. You know, we look at the success that there's been at Snowline up in the Yukon with their deposit that they have on just one intrusive. We're talking about a complex of at least 5 intrusives here at Sitka, and they already have 5.1 million ounces of gold resource, much of that in the indicated category already. So I think some people, looked at these other drill holes out of Rosgobble and said, these ones weren't so great, but not so bad results at Rosgobble either. There is, Sitka just continues to be one to watch, one that we are very excited. It's one of our largest positions in our fund. We think it's another snowline type opportunity, and the valuation is substantially less than snowline for a potential gold target that is substantially bigger. Let's go on to the next. Mogotes. So Mogotes has had some drill results recently, as well as some other news of a strategic partnership with Rio Tinto. So let's step back and remember, we've talked about Mogotes a lot. We really like their drill results. It was only their first drill season at their Filo Sur project, right next to Filo, the joint venture between Lundin and BHP, one of the biggest new gold, silver, and copper deposits on the planet that is now being moved forward into development. These guys are adjacent. They have the same, they're in the same system. They have an enormous property package. They have the same geophysical targets, and they only just started drilling, and they had a discovery hole they had a couple of discovery holes in their first season. I think people might have been a little disappointed because they had to stop the drill season early because the winter came soon. This is in South America and Argentina, but they announced the assays for this drill hole number 16 on the Albor target, and it's 180 meters of 0.98% copper equivalent from only 108 meters of depth. Okay, these are very good results. So good, and so I don't know why. I think people were disappointed because they thought there was going to be even more good drill holes. It's only the first season, but who wasn't disappointed was Rio Tinto, and they have announced a strategic partnership. Can you go back to that other slide, Trevor? So there's a strategic and technical alliance, so it combines Mogotes on-the-ground exploration team with district knowledge of Rio Tinto's global technical capability in order to seek to accelerate the discovery of one of the most prospective copper, gold, and silver belts in the world. The key elements of this alliance are the formation of a joint technical committee to advise the exploration program at Filo Sur, drawing on Rio Tinto's multi-decade track record of porphyry discovery and development. The application of Rio's cutting-edge proprietary geoscience tools, including advanced geochemistry, geophysics, and targeting across the Filo Sur project, and joint efforts to expand the consolidated land position in targeted prospective areas across the broader Vicuña district. And so, subject to the completion of the definitive documentation, parties intend to explore extending the alliance concept to additionally highly prospective mineral belts, including identified by the parties, including in Kazakhstan, where the company also has a property. This is an incredible, as Alan Sabet says here, Rio's strategic investment in Mogotes is a powerful endorsement of the prospectivity of Filo Sur in the broader Vicuña district. Rio Tinto getting involved here is just absolutely huge. We're really excited to see more of what's to come at Mogotes. Let's go on to the next. Okay, we're coming to the end of my news updates, so we are going to. So Eloro did put out an announcement that they're actively drilling now, and so they're doing expansion drilling. I think it's 40,000 meter program. Look, I don't even want to spoil it because I sat down with Tom and he talks about this program. We talk about this deposit. Eloro is absolutely an enormous gold and silver discovery and new deposit out there. One of the biggest silver zinc lead discoveries and resources in the world. And we're very happy to be the largest shareholder. Let's play the video here with Tom. Okay, I'm sitting down with Tom Larsen, the chairman and CEO of Eloro Resources. Crescat's private funds first invested in Eloro back in June of 2020 and provided the company with money for its first major drill season at Iska. We have continued to invest over the years and have helped them to advance what is now one of the largest new silver, zinc, and tin resources on the planet. We are very grateful to have become the company's largest shareholder in the process. Tom, can you give us a basic overview of your Iska project? Start with the history of how you first became involved in this property, including the motivation for investing in Bolivia.
Well, Kevin, thanks for having me, and also thanks for the support of Crescat. You were the first major shareholder into Eloro, our first financing when we ventured in 2020, as you mentioned. It was you've been very, very helpful to the success of where we're heading, where we've been and where we're going. I'd like to start off by saying that when we first became involved in the Iska project, which today, it's described as really it's a giant, and a giant means anything over 300 million tons. World class is usually under that level, but we're deemed as a giant silver tin polymetallic discovery in Bolivia. It's a major silver tin polymetallic, and getting into a little geology, there's a porphyry tin system underneath, similar to the copper porphyries that you see along the Pacific from Argentina up through Peru. It's a Miocene era, 14, 15 million years of age. There's a collapsed resurgence center, caldera. These are Ordovician age rocks that were once 250 million years of age. Major breccia pipes, dacitic domes, and hydrothermal breccias is what really took place during that volcanic Miocene period through these Ordovician age rocks. So a huge system and very similar to being on the Tin Belt, 1,000-kilometer length, up to 200 kilometers in width, starting from the Bolivian-Argentinian border, going northwest into southeastern Peru, where the Minsur San Rafael tin operation is basically producing probably the largest underground tin producer in the world today. That's where their location is. So this tin belt, it basically has Cerro Rico, La Lagua, the San Vicente, and even San Cristobal to the west, not quite on the tin belt, but another volcanic structure, to say the least. Choroque. These are all massive deposits, Bolivian-style bonanza-type deposits. And for Isca being another 14, 15 million year volcanic edifice with no drilling, no modern work done on this project when we first became involved, to see where we started with the help of Crescat and my shareholders and to where we are today, it's a remarkable story.
Yeah, let me just ask, how pleased are you with the advancements to date on the project in terms of the upgrading and the de-risking?
Well, from the close to $80 million that's been raised in the last 4 years, moving this project forward to where we are today, we came out with an MRE back in 2023, really trying to show the true extent of the system, trying to get the parameters, the boundaries of this. And then after that MRE, we decided there were so many underreported areas, especially higher up in the system around the collapsed caldera surface and up the inner walls, that we wanted to infill and try and show that there's an abundance of higher grade silver, tin, and other metals along, within this billion-ounce silver equivalent outline that we, have recently come out with. So the amount of, from where we are now, when I look at what we came with our latest MRE, our 2026 April.
Yeah, Tom, how do you compare the latest upgraded MRE with that first one from the fall of 23?
Yeah, I mean, because of the infill drilling that we moved on after the 2023 MRE, what we were able to come out with, and I think this was the real game changer, and why NDAs have been signed in recent months after that release, was the fact that we've moved into an indicated category of silver, especially at 40 gram. That's indicated. That's 50 meter spacings. That's almost equivalent to, not PFS, that's 25 meter spacings, but it's certainly a lot higher than most PEAs that you see out there that rely on inferred resource, like being 100 meter spacings. So we were able to show 85 million tons, 40 gram silver, along with zinc and lead combinations combined, giving us a close to an 80 gram silver equivalent indicated. So that's even though 81 million tons, that's still that's over 100 million ounces of indicated, $50 an ounce, not bad. So yeah, that's quite an improvement. The work being done on the MRE upgrade, obviously pit optimizations, getting to that crucial, the slope on the pit walls, what's the throughput optimally going to be on a 10 to 12 year mine life, even though we believe with more infill drilling throughout this system over time, this could be a 40, 50 year mine life. But the point is, we want to just show the economics, so I can tell the audience what the NAV valuations are. I'm not allowed to say that until we get to that PEA.
Yeah.
So, it's extraordinary what I believe we're coming up with.
Well, what do you think the defining advantages of Isca are in comparison to other mining projects in the country?
Well, let's take a look at where it started. I mean, we dealt with a fellow called Dr. Osvaldo Arce, Dr. Bill Pearson, who was front and center and really helped Eloro immensely, through his network in South America. And I'd worked with Bill on and off for many years deep respect for him. He had a good contact in Dr. Osvaldo Arce, who actually worked on a property we had in Peru, back in about 4 or 5 years ago. We still have remnants of that project property. It cost us very little on the balance sheet. But Bill, when I saw how well an explorer, a public company called New Pacific Metals, NUAG, they first became involved in the country through Terry Solomon. There was the Rui Fong of Silver Corp, Ross Beatty of Pan American Silver. They put together some funds and underwrote an explorer called New Pacific. And they wanted to go after a couple of established deposits that could have been, moved up in rank, and one being the Silver Sands, which they moved into in 2018. But my former background was that of a stockbroker back in the 80s. I've always really enjoyed, the brokerage side of these companies, and trying to keep good, responsible floats in place as we're moving forward. But I saw how the share cap of New Pacific Metals just went through the ceiling. It was like 30-cent stock went up to $8-9 in 2018-19 in Bolivia, and I thought, my God, how are they getting this traction, especially in sort of a closed country from the standpoint of foreign investment in a place like Bolivia? Mm-hmm. And that's what sort of made me. We were having some issues in Peru just with local communities and the bureaucracy that goes on for a junior, that I found, at least in Peru. So, I reached out to Bill and said, let's talk to Dr. Osvaldo Arce, who is president of the Geological Society of Bolivia at the time, from 2010 to 2018, has written volumes on bonanza-style Bolivian metallogenic deposits, primarily on that tin belt that I just showed you, where those major volcanoes, the mature volcanoes, the ones that retain metal 10, 15 million years later, not 2 million years later. And Isca was one that he was asked to visit. This is being Dr. Osvaldo Arce, back in 2016. It's a private ownership, which is so important when you're working in this Latin American domain. Private property means, we ended up basically outright owning the economics, 99 to 1% JV that we completed with a $10 million US payment over the last 5 years, which was completed. So we outright own the project. We have no debt, 25 million in the bank. But Dr. Osvaldo Arce was asked by the private owners of Isca to come and take a look at it back in 2016. And Isca had never been a lot of artisanal mining. There was nothing really discovered in this area per se. When you compare it to Cerro Rico or Potosi, you didn't see this type of activity, because what I've been told was that glaciation was really stripped out a lot of the surface metals. And as we noticed when we started drilling, and even some of the adits that Dr. Osvaldo Arce ventured into, which were probably back in colonial days when they were first brought in, were down at the sulfide zone, which is about 100 meters from the oxides on surface. Mm-hmm. And that's where he became very intrigued in 2016. And it reminded him of San Cristobal somewhat, because he'd had a lot of experience at San Cristobal with people he knew that had worked, an operation that was, and is still today, run by the American group out of Colorado. He had a lot of information on that, but an open pit, one of the richest zinc silver deposits out there. And, that started up in 2007. He had a lot of knowledge on that. And he really felt that the type of mineralization, how everything was cooked, the channel samples that were found on the wall rock and in the adits, there was something more going on here. For a private property owner, the Villegas family, who were well endowed themselves financially for Bolivian, when you take a look at the Bolivian way of life, highly regarded in the community of southern Bolivia. They didn't have the money to really go after something this immense, potentially. But remember, there had never been any modern work done technically on this project. So, we reached out to Oswaldo, and it took him 6 months to work a deal. We finally got the deal in January of 2020. And as you know, COVID set in, things slowed down a little bit, but we were fortunate to bring in a local driller, so travel restrictions weren't a problem. And from August on, we've been at this thing, and this is where we are today from the results of the last 4 years.
Mm-hmm. There's some advantages in being on private land, given the issues with the artisanal miners and the cooperativas, and you don't seem to have those issues. In general, how is the political scene in Bolivia these days?
Well, I mean, things were just getting out of hand last year, from a macroeconomic standpoint as well. But the Bolivian, US dollars were hard to come by. Fuel issues were developing in the country. The MAS party under Luis Arce were proving to be, just not capable of moving things along. There were no sort of initiatives for foreign investment that had been promised for 3-4 years. And finally, the MAS party under Evo Morales, who started the MAS party in 2006, he was, his finance minister took over his position a few years ago, but they were in charge. They controlled the Congress. They looked after the whole thing. They got rid of World Court arbitration. They kicked out the U.S. embassy. There was a lot of, distrust with the Bolivian domestic group being the MAS party. And this is why it was so difficult, getting involved. Fortunately for us, we would never have, the Rodrigo Paz Pereira, the National Democratic Party, been in power back in 2020, there's no way we would have had this property. Absolutely no way. So when they came in, the MAS party ended up with less than 3% of the popular vote. They have no recognition in Congress. And so that allowed Rodrigo Paz to move forward. And that's when he started reaching out to the US, to Marco Rubio, to his group, the Department of War, to the DFC, basically the International Development Finance Corporation, the DFC, to come and sit down and let's plot a course how we can move forward, enhancing foreign investment, bringing in US dollars, helping with fuel to get things going. The great thing about Bolivia is it's a small population. It's not like Peru, it's a smaller population. So you're not going to have, and from the standpoint of a religious standpoint, you're not having all of these different sort of religious issues that you seem to be having worldwide these days. Bolivia is very, very, they are nationalistic, but they're just a very proud people. And if you treat them properly and work with them, and we've been there for 5 years, look, San Cristobal is a prime example. Even when Morales took power, through Sumitomo in 2005, spending over $1 billion US to get, a project the size of San Cristobal into a 50,000 ton a day operation that's been ongoing ever since. It's probably, at least, I don't know what the real number is, but I'm sure it's huge, the contribution to, to GDP from the mining sector that San Cristobal has been able to, help with. So, things can get done, but they did it the right way. We've signed an NDA with San Cristobal, so we have an understanding of certain operating inputs. It's a private organization, private company, but it helps us also. They've been very helpful from the standpoint of us moving forward on our PEA, just what those operating inputs and costs might be when we're going through our optimization pit assessments.
Yeah, it's really great that you have the cooperative agreement with the San Cristobal team. I think that's awesome. So, Tom, can we pivot a little bit and talk about significance of this next phase 40,000 meter drill campaign that you now have underway?
Yeah, well, the faster we can, get this behind us, just to get an initial, we could actually come out with a PEA right now if we wanted to base silver prices at $50. I mean, silver's down at 58 or whatever right now. When we first got involved in this, I think silver was $20, $15, $18. I know we've had a real run in silver, and there's lots of experts out there that know a lot more about it than I do. But we're there for the long term. We believe silver, tin, these metals are only going to go higher, or commodity prices or currencies at least will devalue that much more so. So, we're not concerned. We feel that 50, when we brought out the MRE, the latest MRE, we used $40 silver, a good cushion. I would like to use $50 silver. We'll see how things go before the PEA comes out. But even with $50 silver, I mean, we can outline just conceptually in house, and I'll go out on a limb and say this: we believe there's at least 500 million tons of 30 gram plus silver that in an inferred and indicated category, more so inferred, that we can slowly outline. So even if we stuck with what we have today, with a small 20,000 ton a day operation, well, that would be a $700 million CapEx number based on our throughput optimized studies. We could still show a very solid NPV and an IRR, at least 30-40% IRR, 3-year payback, 2.5-year payback, based on numbers that we have. But I can't really say that with authority at this stage. But conceptually, that's where we are. So the whole point of this going forward, moving forward on this 40,000 meter drilling campaign, is let's get that 85 gram silver, get that tonnage, get that 85 million tons into a 10-12 year mine life at your optimal throughput. In our case, 20,000 tons a day will work at a $700-800 million CapEx number, FOB at port. Stick with those parameters, infill to get to that. We've already got at least around the halo around the indicated material in the open pit, the surface open pit area. There's already over 60 million tons of 25, 27 gram inferred that could easily be upgraded with that 40 meter, 50 meter spacings that we're going to encounter. So that's number one. Get that done so I can get the PEA, get a PEA out there. But let's continue the drilling. Let's do 15, 20,000 meters if necessary to get to that indicated. You might even get measured in some cases. But then let's take a look at the tin. I mean, tin and zinc on the far eastern side of the polymetallic. I have a slide that I'd like to show you further down the deck. I think there we are. So this is just a chargeability concept that we brought out with. But what it does is it shows you the tertiary intrusive breccia. That's the green area where the chargeability is very, very low, which is typical of an oxidized system to the west. You then have your epithermal polymetallic, which is more in sulfides, which is a higher chargeability. And that's where we're really zeroing in on the 40,000, at least the first 15,000 meters to take that 85 million tons of 40 gram silver, move that into the 140 million ton potential tonnage of hopefully that 40 gram silver with the zinc and lead. Mm-hmm. I noticed I don't really bring in the tin component into the valuation, but the tin, there is tin in the sulfide. There is work that's being done. We've really beefed up the metallurgical team, Dr. Bernd Lehmann, who's world renowned out of Germany, along, with Mike Hollywell, who's been very helpful, with Mike on. We are looking at varying ways of recovery, even in the sulfides, where you could get a 0.14, 0.15% tin, even if you stockpile it, using it as, blending it at a later stage for what we're hoping to see higher grade cassiterite in that TIB. And that TIB, we believe, is an uplift similar to Cherokee, the tin belt, the tin deposit just 40 kilometers north of us, another major owned by the government, or Comable at least, state-run mining arm of the government. But they produce maybe 4% of overall world tin. And then your San Rafael, both uplifts. We believe from our drilling of last year, we've encountered another uplift from the tin porphyry. If we can show 40, 50 million tons of 0.3, 0.4 cutoff on that TIB with XRT ore sorting in a smaller way, maybe, 5, 10,000 tons a day, on that model, just like, what Minsur are doing at San Rafael with their XRT ore sorting on the tin. I'm not saying on throughout the whole system. I'm saying on the tin. You could have another revenue stream. Yeah, I mean, you look at tin, 0.1% tin, that's $25. Like 0.1 right now is what, 2 pounds. So that's $50, $25 a pound tin pricing, $55,000, $54,000 a ton. Even 0.1, you're getting $50 value. If you can get your recoveries up to that 65, 70% level, and that's what we're working towards for the PEA, there's a good margin, a strong margin for, making some money on as an alternate tin revenue stream.
Sure. Tin is an important critical metal.
Tin is a very important critical metal. It's highly regarded. There's almost no tin source other than what you see in Bolivia in the Western Hemisphere. The United States are looking, you see they really want to sort of become friendly with a lot of, Western Hemisphere countries, Latin America, South America, and it makes total sense. You've got two oceans. Why not build same time zone and work together? If we can help feed critical metal demand that the U.S. needs, rather than they having to rely on Far Eastern sources, all the better. And that's why you see friends of the United States like Korea, South Korea, coming in and spending $7 billion, on the, this new system. It's the Crucible project in Tennessee, basically a major processing complex refinery. They're really thirsty for zinc, especially like our type of zinc with indium, where we have over 400 or 500 ppm. You've got, secondary metals. And I always remember Quentin really liking the Iska prospect back in 2020 when he saw the bismuth that was associated even on some of our gold in the orogenic state in the Ordovician of when we really first started. But we've got the bismuth, the antimony, the cadmium. You've got these different metals that could, as byproduct, could be very helpful in a refinery in a system like that of Korea Zinc. It's not that hard to move material up through the Panama into Texas and up to Tennessee. So, we've signed an NDA with the DFC. I'm not saying that anything's going to radically happen here, but they're certainly aware of the merits of such a complex multi-metal type of polymetallic system that we're proving up.
Indeed. Can we just back up a little bit and regarding the 40,000 meter drill campaign now, can you talk about the rationale and the timing of the two different phases? Is the intention to do an updated MRE after phase one of the program is completed, or would this be done after all of the drilling is completed?
So, this is where it's always, when you're dealing with something this big, it's and myself as a CEO, look, I'm not a mining engineer, I'm not a geologist. I've got some of the best people, I believe, that could actually make this, if we had to go, on our own steam, if we had to go to PFS, if we had to put this into a mini production mode, I believe we could do it. But the team, it's been 3-4 years now. And so we've outlined as I mentioned, a very strong metallurgical team. The mining engineering team, the bench strength there has really been beefed up, especially down in Bolivia. There'll be a couple of announcements on that shortly. What Dr. Bill Pearson did, what Oswaldo's continuing to do, There's over 25 young geos working under Oswaldo. This isn't some 1-2 people looking, at this model. And okay, there's so much work going on behind the scenes, Bolivian work to show, to bring down the de-risking factor of what we have to do. So to get into this 40,000 and what's this going to do? Let's take a look at what the results are. If we're continuing to get the success that we did last year on the infilling in the polymetallic area to the east, and can bring in even more zinc, but get to that 140 million ton number, then I'd like to go straight for a PEA and not bother with updating an MRE. But if let's say we're starting to get other areas, step outs while we're doing this drilling, it's not all going to be 50-meter infill. We as I said, we hope to have 4 drills going before the end of the year. So, if we do start getting more success, we start getting more tin, then there could be MRE updates coming out while the PEA is the first PEA is in the marketplace. I mean, it's really hard for me to really make a comment quite yet on that, because every time I do, I seem to miscalculate. So.
Yeah, well, that's mining, right? A lot of this could evolve as the drill campaign is underway, and 1,000 meters is a lot of drilling, and I think you're hoping to have at least 4 and up to 5 drills before this campaign is done. Is that right?
Yeah, I mean, this is why we're looking at not just one driller. We do have, as I mentioned, Fujita now at Cartier. They've just started to drill. Cartier is another public company that we run, a small company. They're a small shareholder of Eloro. Eloro is a small shareholder of Cartier. Cartier picked up the Gilbert project 18 kilometers away, a former small producer. Lots of potential there. There could be some real blending efforts between that project and Iska down the road. There's some very high-grade silver over in that neck of the woods. Again, 18K away. So, we want to see how major drilling, how well they perform moving forward. But at the end of the day, I want minimally 4 drills going before the end of the year, because those drills are averaging around 50 meters a day. So if you can get 200 meters a day production, 1,400 meters a week, 5,600 meters a month, you're cutting through. And you're moving forward quickly on with the PEA, with that initial 140 million tons basically locked in, which I'm expecting. It's going to allow us to go after other areas as well. Like that 40,000 meters, probably half of that will be heading towards that tin corridor. We'll be heading towards the eastern side of where the zinc, some of the higher grade zinc that we like 2.5% zinc over 150 meters that we were coming out with. So, I'm not going to lock in all the 40,000 meters of drilling to get us to a PFS at 25-meter spacings. This thing's too big. Like, you've got a 1 billion ton envelope. Look at all the infilling that you could do. And that's why I think you do need a major balance sheet coming in, foreign balance sheet at some point coming into this. Because again, I don't want to have 500 million shares outstanding at the end of the day. We're shareholders of this company. And there are ways, I believe, there's no royalties on the property. There's no streaming on the property. We shied away from that. There were no original royalties on the property. What I could see as a nice, clean deal is, selling off a part of the complex, at a huge premium to help for the build of the $700-800 million that would be needed to move this into 20,000-30,000 ton a day operation, producing 15 million ounces minimally a year, and tin with zinc tin. But again, let's wait until we continue the drilling program.
Okay, so a lot of things could evolve. We really appreciate with yourself being one of the largest shareholders alongside Crescat that you do want to protect the equity investors here and keep the share count tight and look for creative financing alternatives. In that vein, what are your thoughts on bringing in a third-party financing partner for this large project. And do you have plans similar to those that led to the recent success at San Cristobal mining? For instance, for the general audience, San Cristobal, with the help of Crescat and its financing partners, is a private company that acquired one of the largest silver deposits in Bolivia, Minera San Cristobal, from Sumitomo Corporation. San Cristobal Mining, under the leadership of PhD geologist Quentin Henney, its chairman and CEO, is the world's fourth largest silver producer, based on just one silver polymetallic ore body that's very similar to Eloro's Iska. San Cristobal's goal is to be the #1 silver producer in the world over the next decade by expanding Minera San Cristobal's mine life and by developing another one of its promising Bolivian assets, both of which are now being aggressively drilled. Crescat's private funds, for full disclosure, are San Cristobal's largest shareholder. So Tom, do you have plans to bring in other strategic financing partners in a similar way to what San Cristobal Mining was able to accomplish?
Yeah, I mean, I look back at how San Cristobal was formulated after Tom Kaplan back in the 90s. He brought in a partner, being Sumitomo, and they helped. I think they came in for 20-30% initially of the asset, and maybe some equity into the Apex Silver company, and ended up 2001 was a very tough time in the commodity space, but Sumitomo had the bench strength to hang in and take it over, and $1 billion later put it into production, open pit, 50,000 ton a day in 2007. So when you're getting into these types of systems, you do need a partner at some point. There's no question. To take full advantage of the value. I mean, the whole key for us over the next few months is to show a really solid NPV, a solid NAV, a solid payback within 2 to 3 years on the CapEx. So that can attract, we believe, with the upside of the other domains within the caldera, to benefit for potential 30, 40, 50-year mine life of this system. But let's get that done. I mean, we're sitting at a 250 million market cap. So I have to be careful because it's too cheap, I'm sorry to say. I'm not looking for a partner to come in at this level. It ain't happening. Not on my watch, unless I get kicked out. And okay, fine. I'll just stay with my shares. But no, we are too undervalued. And the only way we can prove that, get more respect, I think, is to get that PEA, just get those numbers out there, and that drill. It's all about the drilling, and that's why I'm pushing that 3-4 drill program.
I think that's right. The PEA is really important, and it should be quite economic. At the same time, you have this potential for this higher grade cassiterite 10 zone down deeper, and I know many people would like to see some deep drilling down there too, to show that can potentially really add to the economics here. I mean, Tom, you have a really tough job as CEO of this company, balancing all the different parties' interests, whether it's the geologists or the investors who some really want to see that, the full scale of this, the full boundaries of this big system really identified, and others want you to focus in on that pit. I mean, how do you balance, all these different interests?
Well, I think the most important thing, first of all, is the only way this project, now that we've been at it for this period of time, we've got to get the drills turning in a massive way. And we're in a situation, we're financed, we've got a great government now in place, fuel shortages, sure, fuel's expensive, but it's maybe 10-15% higher per meter than it was a year and a half ago on drilling costs. But we're within 400 Canadian a meter. So, it's reasonable. but it's crucial. And that's what we're really working behind the scenes on, making sure, we've got the drills to really activate and move these things along. That's the most important thing at this stage. The other thing is the tin. There's a lot of metallurgical work behind the scenes going on as we speak, because tin is much more complex from a metallurgical standpoint, obviously, than a polymetallic sulfide silver, lead, zinc. I mean, there's no issues on our metallurgy when it comes to, the silver, lead, silver, zinc outline. So, tin.
Can you talk about the tin metallurgy and the MRE release recently noted an improvement in the tin recoveries. Are there further improvements in the recoveries anticipated?
Yeah, the tin recoveries are up. We're up to over, I believe we're over 60%, 58 to 60%. We were down at 50. More work was done on the tin. You're dealing with two types of tin here. You're dealing with a sulfide and you're dealing with an oxide. So obviously you're going to have flotation and gravity separation, but there's also, do you have to bring in a fuming system? What's the granular size? Can you get away with fine grained, or do you have to bring in fuming? And, this is one of the added benefits of having, a bench strength like, Hollywell, Mike Hollywell, and now Dr. Bernd Lehman, who's incredible, with the testing over the next 3 months that we're going to be doing, in the tin corridor, oxide corridor, and in the tin sulfide corridor. So our objective is to get that tin, 70% recovery. If we can get 70% recovery, we're doing really well. We can show 30, 40 million tons of tin with a 0.2, 0.3% cutoff, 0.3 preferably, then that'll be blended in year 5, year 6 into maybe into the PFS. Because I don't know if we're going to be able to have that in play in the PEA in time, because you have to drill out that 30, 40 million tons.
But maybe some big exploration, deep holes to try to tag into that deeper, that higher grade, cassiterite that may not have as many metallurgical challenges, could really help the overall story, right?
Yeah, I agree. I agree. And, I'll definitely, that'll be a priority. Once we, start into the infilling, maybe we'll move that forward more quickly than over to the zinc.
Okay.
So, yeah.
Okay, great. What other engineering work will you need to complete for the planned PEA, and how is that progressing?
Yeah, so in regard to the PEA, I mean, even 2 years ago, we started into some logistical work on the external studies, like, bimodal movement of material from, conceptual plant to by, trucking, optimized trucking, to then the rail line about 18, 20 kilometers away. So that was done, that was looked after through a company called Catalyx. And we are, back with them because we have to finalize on, is it going to be 20,000 tons a day or 30,000 tons a day on the daily throughput, which is obviously all important. So, that study's on standby, but 80% of it, 85% of it's done. So that'll just be for a PEA. I mean, this is almost PFS, but that's on standby. So obviously the drilling has to give us that final number, right? On that throughput. The hydrology, that's ongoing. We've got a good hydrologist, work's being done on that. The pit optimizations, we brought in a top-notch mining engineer, Alberto Reyes, who I will mention soon. They'll be coming in more permanently. He's doing a lot of modeling with mining engineers at Micon, with Harry Burgess and group. We've also got a fellow out of Brazil who's working, a very well-known mining engineer who's working with Alberto on the optimal pit optimization and the throughput. I mean, we've already got internal numbers right now that, I'm pretty excited, to say the least. I would say for the PEA, the TSF, we had Knights Peacehold initiating on the tailings. So most of these for a PEA are almost ready to go. We want to do a bit more, as I mentioned, a bit more of the metallurgy on the tin oxide and on the tin sulfide. We also want to do a little bit of metallurgical work, which we're going to do with this drilling, on the oxides that are in the upper part of the system, in the polymetallic system. So we want to get proper recoveries on that, especially for the silver, because, but it is oxidized, it's not sulfide. So, that could, that might make a change on the initial CapEx of what we bring out with on the PEA. So there's still a bit of that work to be done. But other than that, I think we're in pretty good shape for a PEA.
Great. Well, it sounds like the engineering work is coming along. You talked a little bit about the United States interest in precious and critical metals, and what do you make right now of the increased interest in strategic and critical metals out of the U.S., and how might Bolivia play into that as a source?
I think it's a huge source. I mean, these days you go to Canada, you can't get anything done. Bottom line.
Mm-hmm.
Bolivia is it's open for business. Take a look at San Cristobal. Look how quickly, even then, back in 2004 or 5, they were able to, build within 3 years with, environmental permits. I mean, the thing about us, once we have our PEA, we can formulate the environmental permitting, for the bigger picture, move on that, and that might take a year and a half, take a lot longer in a lot of other jurisdictions.
Right.
Bolivia has, as you know, San Cristobal is a perfect model from the standpoint that you can do business in Bolivia. And, it's a question of, favorable tax initiatives, what we can do to bring in foreign investment. Pablo Ordonez is working really hard, working with the government. He was one of the committee members when Marco Rubio's group came down in November, when they started collaborating. So, and this is why, the embassy is being reopened. There's a lot. The government itself is more pro-US than they are pro-China. So, I think that there's a great opportunity for such a small country that can move quickly. But, you have to be careful. And we're sort of fortunate because, we're not in cooperativa mode. We're not in Comobol mode, which can, create delays. So, that's why, again, we're in a pretty unique situation, being private property. So from the U.S.'s standpoint, I believe that, they're looking for a big zinc source. I think if you got zinc, if you've got an assemblage of metals that we have, I think that will become more noticeable. Let's put it that way, to them. So that's what we're pushing hard.
Indeed. Okay, Tom. Well, we need to wrap up, but this has been great. As I mentioned earlier, Eloro is one of Crescat's private funds' largest holdings across our different funds, and we're the largest shareholder alongside Tom here. We're extremely grateful to have been involved in this project early on. We think there is a lot of potential to grow the overall resource and the mineable economic resource here. Tom and his team are doing all of the work to show that. And this is truly, in our belief, and I think anyone who looks at it can see that this is an elephant deposit of polymetallic silver, tin, zinc, and other critical metals system that has so much room still to grow. They're pursuing both angles, the drilling to establish the full scope of the system, as well as the definition drilling to get this thing into the PEA and the PFS, and ultimately, bring in the right partners and develop a mine here. So this is a very exciting. We call it a silver elephant, but it's silver polymetallic. And Bolivia, of course, is one of the greatest regions in the world for big silver polymetallic systems. And we're just really excited to be investors here. Thank you so much for your time, Tom, and we look forward to having further updates down the road.
Kevin, I'd like to make a quick point that, you need a lot of perseverance in this game. And I'll tell you, you set the example well yourself, and I appreciate your support.
Well, thank you. All right. Well, good luck with this drill season.
Thank you.
All right. Bye. Okay, folks. So let's wrap up here. The market has just closed, and as I said earlier, towards the beginning, I really think now is a great time to be taking advantage of the significant pullback in gold, silver, and the mining stocks for people looking to put money to work, to be getting people who want to get exposure to the precious and critical metals markets. The value opportunity is in exploration, in our opinion, as I showed in that chart earlier on. That is where the deep value and the high appreciation potential is, in our opinion. And it is still very early in this bull market, the bull market for explorers. So I think there's years to go and still ahead. And this is where we can create a lot of value by making new gold, silver, and copper discoveries, turning these things into viable deposits that can be turned into economic mines that the major mining companies are going to have to purchase because they haven't been doing the investing themselves in the exploration. Crescat has been doing the investment in the exploration now, building this phenomenal portfolio now for about 6 years that has beaten the pants off of all the benchmarks, whether it's gold, silver, and the gold mining stock indices. I'm confident that we can continue to do that. And now, more than ever, is a great time to be deploying new capital, especially for those who haven't put money with Crescat funds yet. Yes, we are looking for qualified investors, qualified purchasers. Our two largest funds right now are closed to new U.S. investors because we reached our 100 limit. We opened parallel institutional funds that are open to qualified investors. Now is the time to be taking a look at Crescat. Now we also have the funds where we go short, the global macro and the long short funds. The institutional macro is open. The long short fund is open to new U.S. investors. We're taking advantage not only of the precious and critical metals long side in those funds, but the long short and the macro, but also the short side, especially through our put option strategy, which I think has an enormous opportunity here at record historic valuations, with catalysts abounding for potentially a significant downturn in the market. We think it's a rotational market where money can be made on both the long side and the short side, and that's how we're positioned in our macro and our long short funds. Reach out to Merrick if you're interested in finding out more. His contact information is right here. We'll see you again in 2 weeks. Thanks, everybody.